The manufacturing sector in the U.S. is confirming what we've seen, and what we believed would happen is that the economy is slowing, if not contracting. It is Thursday, May the 1st, and this is Markets with Megan. If you like this podcast, please subscribe, hit that alarm bell, share it with friends, family, and colleagues. But let's dig into what we saw today. It's the first of the month, and every first of the month we get the ISM Manufacturing Index, and this gives us a very good read on where we are from a manufacturing standpoint in the U.S. What we saw is that this index contracted for the second month. Contraction means a level below 50. Anything above 50 means the economy is expanding. We've now seen that this index has fallen for the third consecutive month, and it is the lowest level we've seen this year. So let's dig into some of the details. It was a little bit better than the expectation. It came in at 48.7 when the estimate was 47.9. It still doesn't erase the fact that the economy is contracting from a manufacturing standpoint. The biggest declines here in this index were both in export orders and production. We saw both of them see the biggest drop that we've seen. They're now at the lowest level since May of 2020, and that's when we were really in the depths of the pandemic and, yes, in a recession. The other areas that we're focusing on is there's an inflation indicator in this, and it's called prices paid. So what are manufacturers paying as far as when their goods? And what we've seen is this has increased now. It was a little bit better than expectations, but it's at 69.8. It's increased now for 5 consecutive months, and it's the highest level on this index that we've seen since June of 2022. So if you were to just look at this report on its own, it would show you that the manufacturing side of the economy is in this stagflation type of environment where you're seeing inflation rise, but yet the activity actually decline. Now, markets are higher today regardless of this report. This is mainly because of the fact that we got some tech earnings, and this is the biggest week for earnings season that we've seen for first quarter earnings. And tech earnings, both whether you look at Meta or Microsoft, a little bit better than expected. Also, we're getting any good news is any tiny bit of good news is good news from the trade perspective. So we've got a little bit better news on the fact that maybe China and the U.S. are here working together. So markets are higher today. Tomorrow we'll be back with the much anticipated jobs report. This comes in the first week of every month, and this is going to be highly scrutinized and most likely a market mover, not only from the fact that the labor market side of it is what the Fed's focusing on, but again, the inflation side. So we'll look at average hourly earnings, but also what are we seeing of the impact not only from the Doge effects, but also the trade wars, and are we seeing an impact here on the labor market? That's all we have today. If you want a further history of our podcast, you go to marketswithmegan.fm. Thank you.